Welcome to Fintech CTO Talks. In today's podcast, we will talk about how global fintechs should successfully enter the US market. I am Ami, and in each episode, I sit down with CTOs, engineers, innovators who are making finance faster, smoother, and much more connected. The podcast that goes behind the scenes with the tech leaders, solving the real challenge and rewriting the rules of finance. Money moves fast. Does fintech keep up? Let's find out. Together, we will explore the platforms, the codes, the bold ideas shaping the future and the industry of financial technology. On today's podcast, we have Andy, a partner and managing director at Claros Group. He leads the US market entry practice group. He focuses on helping foreign fintechs and financial services businesses evaluate and execute strategies for expansion into the US market, including product, regulatory strategy, partnerships, and bank licensing. Claros Group is a advisory and investment business at the intersection of innovation, financial services, and regulations. They help clients understand the complex world of financial services and regulation and find practical ways to meet regulatory requirements while building business scale and momentum. We welcome you to the podcast, Andy.
Thanks so much for having me, Emmy. It's good to be
Abs-
here.
Absolutely. So, my first question is, this is a very interesting topic for me, honestly. So, my first question to you is, many fintechs build a US expansion strategy, assuming that US is simply a larger version of what they are doing at their home country. So, where do these financial models typically break? Is it the CAC assumptions, the compliance cost, the bank partnership cost? There are so many things. There are regulatory capitals requirement. So, what is it? I would like to understand everything about it.
Yeah, absolutely. I think there's a lot of assumptions that companies make when they're looking to enter the market, and you described or mentioned a couple of the major ones. I think what I see, a few that stand out, just customer behavior. If let's take lending as an example. I think there's, globally, you're going to be considering a customer's ability to pay, and that's going to itself vary quite a bit from one country to another. But I think there's also, maybe uniquely in America, or at least a big consideration in America, is more around like willingness to pay. So there's some cultural differences around how customers behave with debt and how comfortable they are with having outstanding debt and taking on credit from, some countries that's very rare and exceptional, and then in the US it's very common, and customers are very comfortable with that. You really have to build that into your underwriting and your collection models. The other main one, you mentioned it, but like the regulation, and in tandem with that, the bank partner role, if you're going that route. There are, if you're not using a bank partner, there's state level regulation at, each state has their own regulations and licenses, and for a given product, you might need more than one license in each state. So, over 50 licenses that you need to acquire. Or conversely, you work with a bank partner, which for most companies, I think is the right route, the best route. But even then, there's some licenses you still need, and there's also regulation that's going to apply to the banks themselves, and they need to then ensure that you, the fintech, are they're able to demonstrate that you're complying with those same regulations, because they're going to be held accountable.
Correct. So, according to World Bank, the US accounts for nearly 25% of the global GDP. But yet, many international fintechs fail to scale there. So, what's the biggest gap between the perceived opportunity and the market, the reality of the market?
Yeah, I mean, those stats are always a big part of it, of the allure of the US market. It's a huge population, a huge concentration of wealth. So it seems like it's easy money, but it's also extremely competitive and highly regulated. So what it comes down to, I think, is having a really clear roadmap and understanding as best you can what the pitfalls that you might run into are and how to avoid or at least mitigate them as much as possible. So it's that clear roadmap that I think spending that extra time up front to map out how you're going to do what you're planning on doing makes all the difference and is often the make or break from successful and unsuccessful market entrance.
Okay. And when we talk about market entrance, fintechs have achieved a strong fit into the Europe market or the APAC market. So, what percentage of that success is actually transferable to the US?
It, it varies quite a bit. I mean, sometimes honestly it's zero because it's really it depends on the again the customer behavior and the regulation. There's times where products just aren't um, don't make sense from one market to the other. I mean, as one example, early on, so I was previously led the U.S. legal operation for Klarna for several years, and early on in Klarna's entry into the U.S. market, they had a 30-day invoice product. So you'd buy something and then you would receive an invoice 30 days later to pay, and it was like kind of a foreign concept for American customers, and the it was similar to kind of a credit card structure, but it was just different enough where I think customers were a little confused by it, and it never really took off. And then also there was, um, customers. There wasn't necessarily like a prompt or reminder in place, so there was also some unintentional defaults that were taking place, and then everyone's unhappy. The customers doesn't know why they're getting dinged for a default that nobody told them about, and the Klarna was dealing with having to account for those losses that they weren't expecting. So again, I think it's really just you have to understand whether there is an actual product market fit from your probably successful product in your home market, bringing it into the US.
Okay. And when we talk from the compliance side, today compliance itself appears to becoming more and more it's a competitive advantage. So do you think that we are entering an era where regulatory sophistication is becoming a moat rather than, it is cost center?
Yeah, absolutely. And I think we are starting to see that. We'll see that even more. I think with some of the new um, applicants for bank charters in the U.S. We see like New Bank and Affirm. I think those and many other companies are really, have demonstrated over the years a compliance first mindset, and it's a huge advantage.
Okay. So, like, there are founders who spend months trying to secure a sponsor bank, right? But very little discussion happens around choosing the wrong bank. So, what is the real cost of a sponsor bank decision? Is it lost revenue, the regulatory risk? What is that? And if you could explain us in detail about that.
Sure. Two things come to mind. I mean, the regulatory side of it is really important, and um, it can really. There's two extremes to that. Good sponsor bank. is going to serve as your guide. They really understand the regs better than you, and they will help you to identify opportunities, where you can explore, and other areas where it's too high risk, and maybe there's already been past examples of regulatory enforcement issues that you might not be available. I'm not might not be aware of, excuse me. And then, on the other end, you really sometimes you think you might want a partner bank that's going to give you free reign to do almost whatever you want. And like I would really caution against that. There's you need the partner bank to serve that role of being almost your mini regulator and your advisor, because without that, you and the partner bank can quickly get into a lot of trouble, get shut down, and that's a lose-lose situation. So the regulation is the one piece. I think the other piece that's obviously really critical in these relationships is understanding the commercials and understanding what the market expectations are for a wide range of the issues that you're going to be negotiating with the partner bank. I think in my engagements, that's where we often add a lot of value, is to be able to help a fintech understand where, especially coming from another non-US market, help them to understand which negotiated pieces are really valid and maybe backed by regulation or just backed by market standard, and which areas where there might be more you know room to negotiate, or the bank might be trying to take advantage of you, and you don't necessarily know which is which. So yeah, the regulations and kind of understanding the market and the commercials, I think, are really the most important areas there.
Another important question is, what questions should investors be asking that many are still not asking even today?
Let's see. I mean, I think I think it's really critical um, to understand as an investor uh, what the real what the why is for the fintech. Why are they coming to the U.S. market? Um, what's their reasoning behind it? And really making sure that that's a sound kind of bulletproof argument. There's a lot of reasons that aren't good reasons. I mean, I posted recently on LinkedIn with kind of a list of good reasons and bad reasons, and what we see sometimes is just like, let's just kind of throw everything at the wall and see what sticks. It's not a
Hmm.
good reason. Or let's go to the US because we can make money, because there's so many people there. And like I said earlier, it's very competitive. It's highly regulated. You need a better thesis. So um, having some strong thesis for why you're entering the market. Perhaps you do have a strong customer base in let's say like a B2B context, and they're already in the US market or entering the US market, and they're going to follow you. Like that can be a good basis. There's also we see some success when there's diaspora banking, where large populations from a home country are already in the US, and they are eager to be using this fintech or bank service that they or their friends and relatives use back home, and they're excited to see it in the US. Like those are a couple of examples of good reasons, as in contrast to the let's just see what works.
Absolutely. So, do you see AI ultimately reducing the compliance cost or simply moving the compliance cost into new categories? And where do you think the industry is underestimating the future regulatory scrutiny?
So I think obviously um, AI is already having a huge impact on financial services. From a compliance perspective, I mean, I think it's going to cut both ways. There's some really innovative compliance solutions that are leveraging AI that are, will ultimately help save costs, but there's areas where we're going to see such an increase in um, compliance risks because of AI. A couple that come to mind are, like issues around money laundering or issues around fraud. I mean, the sophistication of financial services fraud, when coupled with AI's capabilities, are are already introducing and will continue to introduce just um, huge problems for banks and financial services. So that's where the expense is going to come in, and where the counter AI solutions are going to have to. That's where the expenses are going to have to be repurposed.
Okay. And on the other hand, there are companies, they expand into the US, but they often hire, a head of compliance or general counsel or a US CEO. So, what is the first strategy hire that delivers the highest returns on investments, and which hire is typically made too late?
There are a couple that come to mind. I think some go-to-market or general manager in the US who understands the market, understands and has relationships at, on the partner banking side, on the customer side, if they can, you know, as they're onboarded, can bring with them, uh, you know, strong prospects, and maybe even bring a small team as well. Um, that's, you need to have clients right away, and you need to be able to, that's how you make money. So I think that's really important. But then, in parallel with that and really close with that, I think, um, you know, legal compliance are obviously critical at that early stage. And you can go, at that stage, it sometimes makes sense to have more of a fractional approach.
Hmm.
But you do need to have someone on the ground who's going to understand the regulation, and who can also be the face when you're talking to partner banks or regulators, uh, that can demonstrate, yeah, like we know what we're doing here, and we know what the risks are.
Okay. And on the, like, the previous question about the AI, there is a estimate by McKinsey which was given, like, AI could generate up to 1 trillion annually for the global banking sector. So where do you see the biggest AI opportunities for foreign fintechs entering the US market? Yeah, it can be
Um,
growth, compliance, the operational, it can be anything.
yeah, I think primarily it'll be around operational efficiency. I think that there's what we're seeing now with AI, at least early on, is, there's some things it works for and some things it doesn't, but there's definitely, you know fewer people can do a lot more. Like, skilled people can do a lot more with, AI support, um, than even a few years ago. It would take, many more employees to get some of these um, same tasks completed.
Okay. Without naming companies, Andy, like, what are the common patterns you have observed over the years among fintechs that ultimately abandon their US journey or their US expansion efforts?
Um,
Like the top two or top three, what comes to your mind?
yeah, I think one is really just lack of product focus. I think there's a temptation to, cast a wide net and offer, a wide range of products. There's a lot of expense that goes into that, and also uh, those products need, each of them need, a lot of attention, a lot of care, and they're not going to get that if you're launching really broadly. And so I think we've seen companies try to do that and fail, where had they really led with a flagship product and really honed in on that and really built customer loyalty, and then expanded from there, that they may have been in a different boat. And then the other, top reason I've seen is just like kind of related to that, but just the not having a strong why, as we talked about earlier, not having a strong justification or reason for why they want to go to the US beyond just a lot of people and a lot of money.
Okay. So, with numbers, like if 100 fintechs announce or plan to enter the US market, how many would you estimate successfully would achieve a meaningful scale in the next 5 years? How many will never launch? How many will be a proper product market fit? How many will become a true significant player into the market? If you know, just by numbers, by percentage.
Yeah. Yeah, that's a tough one. Um, I think there's, I'm optimistic. I'm bullish on the US market, but I still think, there's a lot of companies that are going to come in and try to move too quickly or try to do so without having the proper support on the ground, with folks who understand the US market. So I think we're still, we're always going to see at least like, 25% of those companies just not being able to succeed. And then I think there's kind of a, almost like a bell curve. There's a certainly that middle group that's going to be able to find some success, but if we're talking however many years they're here, some of those are still probably going to leave the market. We've seen that before with other companies that made a big splash, and then a few years later you find out they're gone, or they're packing up to leave. As far as like true success stories, yeah, I think another, maybe the top quarter of
Hmm.
companies somewhere around there can do it right. As I said, with the right support and timing, uh, and understanding all the regulation and compliance and competition in the market.
Okay. This is a hypothetical question. Imagine you had to invest 10 million today into one of these four sector, fintech expansion strategies. But you will have to give us a reason why you are doing it. Is it the European fintech entering the US, US fintech entering Europe, the Latin fintech entering US, or APAC fintech entering the US? What is the perfect answer for this?
uh, I think, entering the US, I think is, it's complicated, but I still think it's worth the effort when done right. And I think, among those different kind of entry points, um, I don't know, definitely seeing a lot of LATAM interest and expansion, and I think that that's probably in the near term, in the next 5 years or so, uh, where I would be most interested in investing.
Okay. All right. Perfect. One last question. What's one piece of conventional wisdom from years of experience about entering the US fintech market that you believe is completely wrong? And how would you correct it? And what should founders believe?
Yeah, I think what comes to mind, there's growing concern and skepticism around partner banks and entering through that route, or or just that model as a whole. Um, and personally, I think that's I'm still feel really positive about that route. I think that there's room and need for improvement with some of the partner banks to to be more flexible and innovative. But for most foreign entrants coming into the US market, look, they're not, even though there's a better opportunity now for bank charters than there has been for maybe 20 years, it's still a long and expensive process to get a charter. And it's not right for everyone. I mean, you need to be, not everyone wants to be a bank. And even some companies that might want to be a bank down the road, it doesn't make sense for them to pursue a bank charter now. And so the best, the next best approach, in my opinion, is to go the bank partner route. And I think it's overblown the trade-offs from a revenue and compliance perspective that the bank partnership model brings in. I think it's really the best way to quickly, compliantly get in the door in the US market, so to speak.
Perfect. We'll move on to the next segment. That's the rapid fire round. I'll ask you
Okay.
a few questions and you'll have to be very quick in answering.
Okay.
It's majority one word, okay?
Okay.
No explanations needed. Faster path to US success. Great sponsor bank, great product, great compliance. Pick one.
Sponsor bank.
Who would you trust more to launch a fintech? A former regulator, a former bank, or a former founder?
Mm. Regulator.
Okay. Bank charter or sponsor bank partnership?
Uh, I mean, a rapid fire. That one, it really depends on the company. I guess sponsorship, just because it's probably from a numbers perspective, there's more likely
Okay.
to be your route.
Okay. You can only keep one fintech company in your portfolio for the next 10 years. Klarna, Stripe, Revolut, or Chime.
Stripe.
Okay. If you could spend 1 week inside any company to see how decisions are made, which would it be? JP Morgan, Stripe, Coinbase, or Nubank?
I'll go Stripe again.
If you had to start a fintech company tomorrow, what category would you choose? Stablecoins, AI compliance, embedded finance, or cross border payments?
Stablecoin.
Okay. One last question. One person in fintech whose LinkedIn post you never skip.
Mm, that's a good one. I'm gonna. The first one that comes to my mind is my colleague Roman Goldstein. He's
Okay.
just really good
Okay.
content.
Perfect. We'll move on to the next segment. There's one question which you'll have to just answer in 30 seconds. How global fintechs can successfully enter the US market in the AI era?
Let's see. I think there's a great opportunity to leverage AI, and I think you can use it to help both navigate and understand the U.S. market early on, and at later stages, it can be really helpful for the operational efficiency that we talked through, and I think pressure testing a lot of your um, you know product market fit concepts and building out some of the UX. But it's all still needs to be, and like anything else with AI, there still needs to be a lot of human oversight and expert oversight. In almost any industry, the most dangerous part of AI is where you don't know enough about the topic and you just lean on AI and trust the answer, and you don't know which pieces of it sound a little off that you need to pressure test. And when you do test it, come to find out like it was hallucinating or whatever word you want to use. And so the critical kind of coming together of AI with also expert, whether internal or third party experts on the market and compliance and product.
Perfect. Thank you, Andy, for joining us today on the podcast. It means a lot to all of us.
Thank you, Ami. This was great. This was a lot of fun.
Absolutely. So, everyone, let's stay connected for more understanding and exploring the fintech market. If you have any questions related to the topic, please feel free to message. Andy or I will definitely reply to you. That was Andy sharing his insights on today's episode. We will meet next time in the next episode. Until then, stay curious, stay inspired, and keep exploring.